Assalamu alaikum wa rahmatullahi wa barakatuhu. It's going to be a very interesting session today, inshallah, for the simple reason that we're going to be discussing the Eof Standard, and in a very simple manner, I am going to take you through what Eof talks about and what is the convergence between Eof and Islamically. And we will then go on to talk about, just a second, I'm adjusting the light over here. Yep, it's better. That we should start. Inshallah, the format is going to be that I will be presenting to you a presentation which will talk about the Eof Shariah Standard 21, which deals with investment in shares and bonds. We will focus on the investment and shares part. I will take you point by point as to what this standard talks about and how Islamically converges with it or diverges with it. And there's another slide at the end which talks about the areas where the Eof standard is silent about. So we will speak about that too. At the end of that, if you have any questions that needs to be put, you can put it in the chat function on the right-hand side of your window, and I will endeavor to answer all of them. So let's get started. This session will take about not more than an hour, inshallah, today. I will start sharing my screen. Yes, here we are. All right, so there is going to be a discussion on the Eof Shariah Equity Investment Standard. That standard is called Financial Papers, Shares and Bonds, and the standard number is 21. Moving on, just to highlight the agenda, I'm going to present an outline and analysis of the Eof Shariah Standard 21. Then there is the slide on how Islamically Shariah equity screening criteria is aligned with the Eof Shariah Standard. A lot of people ask us this question as to, does Islamically follow Eof Standard? Our answer has been yes and a no. You will learn more in this webinar, inshallah. And how Islamically Shariah Equity Standard fills the gaps in the Eof Shariah Standard 21, which will be followed by the question and answer session. As simple as that. Let's move on. So Eof Standard 21 is the key standard which talks about investment in shares and bonds of for halal investments. This standard was adopted in the year 2004 in the month of May. This outlines the rules for issuance as well as dealing in shares of companies. It gives explanation for the permissibility / non-permissibility of certain transactions. Before I get to that, I would like to also share with you this screen, which shows you the entire standard. So there's a statement of the standard followed by sections, right? I mean, if I have to show you in detail, so there's rules of issuance of shares, followed by the rules for dealing in shares, which is again followed by the rules for issuance of bonds. There are just 4 sections in this. The important part over here is the basis for the standard. So here there is a great amount of explanation as to why trading in shares is permissible and the likes of it, which also quotes a lot of hadith as to what is the basis of certain rulings. So this is pretty detailed work that has been done, alhamdulillah, by the Eof, which gives all the users in the world a basic primer as to what Sharia standards are for equity screening. So Eof Standard 21 talks about issuance of shares in a corporation is permissible if the objective of the company is Sharia permissible. So one of the key things that Eof bases its permissibility of investment in shares is by putting this yardstick that the objective of the company should be Sharia compliant. What does this mean? How do we ascertain an objective of the company? When companies are getting formed, they issue a prospectus, or if an existing company is going on and on, or as a going concern basis, the management discussion and analysis talks about the objectives of the company. The objectives of the company are also mentioned in the Memorandum of Association of the company. It's called the MOA. There are different terms and terminologies used globally to ascertain this document, but the most common nomenclature for this is the Memorandum of Association. In this, all the shareholders or the promoters of the company come together and mention that what is the kind of business activity or activities that the company is going to undertake. So here the EOF standard tells that if the objective of the company is Sharia compliant, right, or if there is nothing which is averse to Sharia compliant, to the Sharia rules, then investment in this company is permissible. This is one of the rules. Now, EOF standard goes on to say that non-permissible activities such as dealing in riba, pork, and alcohol should not be the objective of the company. That means if the company mentions that it is not going to indulge in any non-Sharia activity, or the activities mentioned by the company do not include any of the non-permissible activities as per Sharia, such as riba, dealing in riba, or trading in pork, or sale of alcohol, or manufacturing of alcohol, or the likes of alcohol. So EOF standard specifically mentions these three things, which is riba, pork, and alcohol. Secondly, a lot of people would also ask the first question, which is a joint stock company, an investment in a joint stock company permissible? EOF standard also answers that, and it says ownership of shares of companies is permissible as it is a form of partnership permissible by Sharia. So modern corporations can indulge in conducting Sharia premises, and Muslims are allowed to be part of that investment activity by participating either at the IPO stage, which is the initial offering of shares, or in the secondary market, which is at the stock markets, whereas buying from an existing shareholder of the company. Both of these activities are permissible. So the principal rule is that investment in a joint stock company is permissible because it is akin to a partnership, and partnerships are permissible in Sharia. Let's move on. Now, in terms of class of shares, EOF is very clear in its standard, which says that preference shares are not permitted. That means you cannot invest in the preference share of a company. And what is a preference share according to EOF? A preference share can be something which has differential financial gain to it. That means it may be having a preferential profit sharing. That means all ordinary shares will get undefined profit or loss depending on the performance of the company because they're equity shareholders, whereas a preferential shareholder could either be guaranteed a profit return or can be guaranteed an extra amount of profit. Both of these are considered non-permissible by EOF. Also, in addition to this, one second, let me see if I am online. I think I should be. Sorry for interrupting this. I'm just trying to check my internet connection. I think it's fine. Thank you. So let's get back to the presentation. Yeah, the other thing that EOF also tells is that if you are having or owning a share which gives you preferential treatment at the time of liquidation, That means if your shareholding allows you preference in the liquidation of assets of the company, then that kind of share is not permissible for investment. So either if it gives you preferential financial gains or it gives you preferential treatment at the time of liquidation, these shares are not permissible for investment. But if there are different classes of shares, and if an ordinary share also has a characteristic of having either a differential voting right or it has an advantage in terms of procedural or administrative rights, such shares are permissible for investment. So if a share allows you a differential voting right, that is probably instead of one voting right per share, you get two voting rights per share, this investment is permissible. Or it gives you a procedural advantage, right? Owning those shares is also permissible. So that's the clarification that AOIFI has given. So preference shares in general are not allowed, but shares which are different from ordinary shares, having either a enhanced voting right or a differential voting right, is permissible, or it's something which gives you a procedural or an administrative right is also permissible. Now, the other key thing which AOIFI touches upon is it is permissible to buy shares for investment or trading purposes. So AOIFI very specifically mentions that you can invest in a company with a view of either getting a long-term position, holding the share for a longer period of time will give you good investment return. That's what your anticipation is. It is permissible if you buy shares with a view of investing in that company. It is also permissible to buy shares in that company with a view to trade in them. That is gaining a profit due to differential in the buy and sell price. So AOIFI clearly mentions that you can invest in a company for investment purposes, that is getting a return out of that company based on its performance, or by simply trading in that company due to the pricing differential. Both are specifically permissible under the AAOIFI standard. So trading is permissible as well as investment in that share is permissible. Now, the other key thing which has to be read very carefully is it is permissible to buy shares on spot or deferred basis. Everybody understands spot, right? You pay money, you get that share. But deferred basis, do not confuse this with permissibility or impermissibility. We'll discuss this later, of futures and options. This has nothing to do with futures, options, or swaps. What AOIFI Sharia board meant through implementation or mentioning of this item, that is permissible to buy shares on spot or deferred basis. Here, deferred basis means at the time of IPO, you may be asked to pay 30% of the price, then 20% of the price, then the balance 50% of the price. It's permissible. When you buy shares from a secondary market, if you have a deferred payment schedule that you need to settle this stock within, let's say, T+1 or T+2, the payment part I'm talking about, then also it is permissible. That is it, as simple as that. So you buy the stock, the payment for this can be deferred if your seller agrees to it as well. That is what is also permissible. Now let's look at some of the other things which AOIFI talks about, right? It is permitted to trade or invest in shares having mixed income or debts or cash. Now the critical thing over here that I'm trying to mention over here is AOIFI standard clearly talks and discusses such companies which are not 100% Sharia compliant. What I mean to say by this is AOIFI standard also takes cognizance or discusses such companies where not all of its income is 100% halal, not all of its debt is interest-free, not all of its cash is interest-free. It talks about such companies where there's a mix of halal and non-halal debt, or there is a mix of halal and non-halal cash, or is a mix of halal and non-halal revenue. It clearly talks about that. And it gives permission that investment in such companies is permissible where it is a mixture of halal and non-halal income subject to a criteria and thresholds. Now let's study what that is. In terms of business, the AOIFI standard tells that the objective of the company should not be averse to Sharia principles. They don't go about explaining what is and what activity is considered to be averse. They just give a general guideline that if the objective of the company is not averse to Sharia principles, it is fine. Now, they also define that interest-bearing debt. When I said mixed is permissible, they have given a threshold in it as well. Now, let's talk about the threshold. They say that interest-bearing debt to market capitalization should be less than 30% of the company. Should be less than 30%. That means if the market capitalization of the company is $100, interest-bearing debt should be less than $30. Got it? So if it touches 30 or more, that time it becomes non-permissible due to its debt ratio. Similarly, AAOIFI has put a standard and exclusion basis its cash holding. So if interest earning cash to its market capitalization is more than 30%, then the company is non-permissible for investment. So if a company has to become permissible for investment, the interest earning cash to market capitalization should be less than 30%. This is another threshold or another filter that AAOIFI has mandated. The last thing, which is in tandem with the first, so AAOIFI tells you that objective should be non-averse to Sharia principles, but if the company earns revenue which is non-Sharia compliant, this portion of revenue should be less than 5% of the total income. So AAOIFI standard tells you very, very clearly that income from prohibited sources should be less than 5% of total income. So this, in a very concise manner, AAOIFI mentions that the objective should be Sharia permissible. If they get non-permissible income, that should be less than 5% of the total income. Thirdly, it talks about debt to market capitalization should be less than 30%. It talks about interest earning cash to market capitalization should be less than 30%. Moving on. Now, one of the key questions that would have come into your mind is why trading / investment in shares having mixed debt, cash or income is permissible. What I mean to say over here is, why does AAOIFI allow investment in companies which has a mixture of interest-bearing debt, interest-bearing cash, and a mixture of non-permissible income coming into the business? AAOIFI has quoted various Sharia rules, various ahadith, and various jurists, and has given reference to various Fiqh Academy resolutions as well. The key gist of it is that the general rule for removal of hardship. Now, the stock markets has become an essential part of our economic system. If you have to raise significant amount of capital for your business, you will have to get to the capital markets. When you get to the capital markets, you will be encountered with certain regulatory issues which will have to follow. Now, if due to those regulatory issues or due to the business environment that you're operating upon, lets you or forces you to get into an interest-bearing debt, or forces you to deposit your cash into interest-bearing instruments, or you are bound to get into certain activity which gives you interest income, these activities can be overlooked if they are within the threshold that has been prescribed. Now, the four things that AAOIFI quotes is the general rule for removal of hardship, acknowledging greater general need for such companies, widespread market practice, that is what is being practiced in the economy or by other businesses in the economic sense, the rule of primary objective overtaking the secondary activity. Now, this is a very important and a clear-cut example. Now, here what it says that if the debt of the company is 30% to its market capitalization, that would also mean that it is not kept to its entirety. So if a company gets, let's go from the revenue perspective. If the company is less than 5% income from non-permissible activity, that means it is a very small component of the entire business activity of the company. Hence, it is considered to be a secondary thing. Wherever there is a secondary thing which is non-permissible, but the primary is permissible, the primary overtakes or the entire thing takes the shape of the primary activity. So if the primary activity which contributes more than 95% of the revenue is compliant, then the company's business activity is considered to be compliant. Similarly, the interest-bearing debt should be kept less than 30% of the threshold. It should be less than capitalization. In this scenario, it is considered that just third of the company's revenue is impermissible, hence will allow investment in these companies. If non-permissible debt or non-permissible cap exceeds this 30%, investment is not permissible. So EOFI keeps it to be less than a third. Less than a third is considered to be insignificant or gives the impression that the majority is fine and the minority is not fine. As long as it is kept in minority, it is okay. If it goes into the majority space, then it has to be excluded. One of the other key things that EOFI standard talks about is the purification or elimination of prohibited income is essential. Now, whenever you get an interest income into your business or you get non-permissible income, whether it be operating or non-operating or whatever reason it be, to invest in Sharia compliant stocks, it is an essential part that purification of non-permissible income has to be conducted. So what does the EOFI standard say? It says it is mandatory on such persons who is holding the share on the quarter/period end. Now, EOFI standard defines that it is mandatory on the shareholder to purify the non-permissible income if you are a shareholder at the end of the declaration or the end of the calculation period. What it means is a company may either calculate it at the quarter end, so it may be paying quarterly dividends, or it may be paying a semi-annual dividend, or it may be paying a annual dividend. If you are a shareholder at the date of announcement or the period it is relating to, then you are liable to purify. But if you exit the stock before that date, then you do not need to purify. Now, EOFI also tells that it is mandatory purification whether profit has been distributed or not. So EOFI standard tells you that whether you get dividends or not, you will have to purify. The formula that they have given is take the total impure income of the company and divide it by the total number of shares. That will give you impure income per share. This gives the amount per share that has to be purified. So you then multiply that amount with the number of shares that you hold. What does purification mean? You just have to donate it to a charity of your own choice. So responsibility of purification is on shareholder or investment manager. If you're directly investing in a company, right, it is your responsibility to purify. But if you're investing it through a mutual fund or an investment manager, then it's the investment manager's responsibility to ensure purification is conducted. So the investment manager may either do the purification himself or give you the ratio that has to be purified. So then it comes on to you as a shareholder to purify the non-permissible income. Now, EOFI also goes ahead to clarify that no purification on commission earned by brokers or custodian. If you get a commission as a broker or if you're an intermediary, then you are not under the ambit of purification because the money that you earn is for a professional service that you have rendered. It is not because you are the owner of that stock. It's the owner's responsibility to purify. Okay. This is a very important thing that EOFI standard mentions. So EOFI standard also mentions that if you are buying shares with interest-bearing loan, what EOFI standard means over here is that if you want to buy a stock of Apple, but you do not have your funds and you want to borrow funds which are interest-bearing and then buy shares, this is not permissible. Clear? It is also not permissible to sell shares that you do not own. So short selling, as they call it in the local market parlance, is not allowed. So short selling is not permissible. Also, EoF standard tells in very explicit, clear terms that it is not permissible to trade in futures, options, or swaps of Sharia compliant stocks also. So trading in futures, options, and swaps is not allowed. Trading in a manner that is short selling is not allowed. Buying shares, even if they're Sharia compliant, but on borrowed money, which is interest bearing, is also not permissible. So they give out these small trading rules as well. A little bit of it though. Now, this is a very important thing which everybody keeps asking on a lot of forums, that is intraday permissible or not. Okay. Now, it's Eof standard. The section is 3/7. Section 3/7 talks about it is permissible for buyer to sell the shares if the formalities of buy and transfer or liability shifts to the buyer, even though the final settlement has not been done in favor. So what it means is it is permissible for you to sell the shares if the buy formalities has been completed. Here, constructive possession is granted. Okay, EoF takes into consideration that if you get constructive possession of your stock as a buyer and all the risks and liabilities of being a shareholder transfers on to you, then you are good to sell it. Now it also considers the rules of the trade/market practice, which has to be taken into consideration. So in any market, whenever you try and sell, right, you have two options. Either you can sell as a short sell, or you can sell the stuff that you bought on the same day. You do not necessarily have to sell through your custodian account or through your wallet where you actually hold the digital copy, the digital shares. You can sell the shares which you bought in the morning immediately as well without taking delivery of it. That is a market practice, right? So keeping all of these things in mind, if you have completed all the buy formalities, if you have gained constructive possession of the stock, if all of the liability of owning that share shifts onto you, then you can definitely go ahead and sell that share. That means intraday is permissible, as we normally call it, if you satisfy this condition. That is, your buy side should be completed in its entirety. Possession need not be in your wallet or your custodian account. Possession can be constructive. Plus, the market practice also supports this kind of trading activity. Hence, intraday is absolutely permissible if you buy first and sell later, and you do not do it with interest-based margin, which I've spoken about earlier. So now let's compare how Islamically Sharia screening criteria is aligned with the EoF standard, right? Now, you must have seen the Islamically Sharia standard on the Islamically website or on the app, or in a couple of blogs that we've also mentioned it. Now, a lot of people ask us if our standards or our screening criteria is in alignment with the EoF Sharia standard. So let's talk about that. So there is definitely a huge amount of convergence between the Islamically screening criteria and the EoF standard 21. So let's talk about, or let's see what are the convergence areas. Convergence means the similarities, or how is EoF criteria and Islamic criteria similar. Both of these talk about the prohibited income. So prohibited income percentage is same as EoF, which is 5%. So EoF tells prohibited income should be less than 5%. Islamically, is prohibited income less than 5%. EoF talks about purification of impure income. Islamically also talks about purification of impure income. Now, the Sharia financial ratio filter on debt and cash is the same as EoF. So EoF tells that we should apply a threshold on interest-bearing debt and interest-bearing cash. Islamically also tells the threshold should be applied on interest-bearing cash as well as on interest-bearing debt. Both EoF and Islamically have the same benchmark, which is the market capitalization. So EoF also talks about market capitalization. Islamically also talks about market capitalization. So prohibited income 5%, same as EoF. Purification of impure income, same as EoF. Apply filter or financial ratio filter on debt and cash, same as EoF. The benchmark used is market capitalization, same as EoF. Let's see what are the divergence, where EoF and Islamically differ or is different in some manners. So Sharia financial ratio filter on accounts receivables is applied in Islamically. So if you go and see Islamically ratios, financial ratios, there are 3 financial ratios, which is debt, cash, and accounts receivables. EoF talks about only debt and cash. It doesn't talk about accounts receivables. Although it tells very clearly in some of the sections that it is permissible to invest in corporation instead of a corporation only if it does not consist of only debts. That means if a company has only accounts receivables and has nothing else, it is not permissible to invest in that company. They have not defined the threshold. Islamically, Sharia court has defined the threshold. So they said it is less than majority. So just about 49%. Accounts receivables to market capitalization should be less than 49% in Islamically. Although EoF talks about it, but it hasn't defined a threshold. So there is a slight difference. So Islamically has defined it. EoF talks about it, but has not defined it. The other thing where EoF and Islamically differ slightly is all the thresholds of EoF is at 30%. So debt to market capitalization should be 30% or less. Cash or interest-bearing cash to market capitalization should be less than 30%. Whereas in Islamically, both of these ratios, debt and cash, should be less than 33%. So there's a 3% difference. All of these are in the range of a third. The common principle of the yardstick, which has been applied for both these criteria, is a third concept. EoF defined a third as 30%, whereas Islamically has defined it as 33%. So that's the slight difference. As I have mentioned earlier, EoF has mentioned in its purification norms that irrespective of whether the company has declared profit or not, that means it has given dividend or not, purification has to be applied. Whereas the Islamically Shariah board takes the position that only if dividends are received, then only purification is applicable on the dividend part. But that brings me to the end of this my presentation. We will be happy to take on the question and answers. But for some reason, yes, I'm back now. But for some reason, I have lost all the questions which have been posted. So I will be really grateful if you can post the questions again, and I can start answering them quickly. One of the questions which had come in earlier was, what does EoF talk about compounding of interest? Interest in all its form is non-permissible. There's absolutely no what do I say? There's absolutely no no consideration why interest would be permissible. So whether simple interest or compound interest, it is absolutely not permissible. Okay, thank you for putting the questions again. There's a big question which is coming from a user. I'll try and read it out and I'll inshallah answer it as well. Okay, very important, simple answers I am going to give in terms of why intraday trading is permissible. Very simple. Please do not confuse yourselves with games of chance. trading in the stock market is not same to gambling. Okay, there are various fatwas, there are various what do I say, jurists, there are various Sharia scholars, there are various muftis globally across schools of thought who have dealt with this subject, that intraday trading is absolutely permissible. I mean, even if you see the Eof Standard, right, there are more than 30 Sharia scholars who are part of the Eof Shariah Standards board, including Mufti Taqi Usmani, who has been a pioneer in this space, including Dr. Muhammad Al-Ghari, who is also the chairman of our Sharia board, including Dr. Sattar Abu Ghudda. May Allah be pleased with him. He passed away recently and has been a tremendous contribution to Islamic finance. He was also a part of our Sharia board earlier, and he retired. All the Sharia scholars unanimously, almost unanimously, are of the opinion that intraday trading is absolutely permissible if you can prove that you have bought the stock and you're selling it after that, right? I have dealt with it as well. Section 2/7 of the Eof Standard tells very clearly, sorry, not 2/7, Section 3/7 very clearly tells about it is permissible to the buyer of a share to undertake transactions in it by way of sale to another and the like after the completion of formalities of the sale and the transfer of liability to him, even though the final settlement in his favor has not been made. So do not confuse ownership, or do not confuse ownership rights. Do not confuse the possession with ownership. Possession is different. When you are owner, you get constructive possession, and due to certain technicalities or due to certain procedures, you may get physical possession, right? Getting physical possession is not a predominant condition for being the owner. It is very, very clear. So intraday trading, if you buy first and sell later, and you are completely sure that your buy has been executed and you are liable for that buy stock, and you have got a confirmation from the stock market or from your broker that your buy transaction has been executed, you can go ahead and sell. There's absolutely no confusion in this, right? I mean, if people want to take an opinion or give their opinion that this is not permissible, please go and challenge the Sharia scholars, okay? Don't come and challenge us, because I'm not a Sharia scholar. I just pass on the message. They have put so much research into it, right? And they have decided that this is permissible. And they have also mentioned it in the Eof Standard, where there are more than 30 Sharia scholars, including Mufti Taqi Usmani, who is considered to have a very conservative approach towards the entire thing. He has also approved this, because from my opinion, from the way I can read it, he was the chairman of the Eof Shariah Standards board, as per the Eof website as well. Okay, there's a question that do scholars of all jurisdictions approve the 5% prohibited rule? Eof Standard does, Islamically Sharia board does, but there are other Sharia scholars who also advocate 3% or who advocate 10%. In the Malaysian Securities Commission have got distinction between certain businesses where 5% is tolerable and certain businesses where 20% is tolerable. So, but 5% has a lot of support globally among Sharia scholars. Someone is asking if IPOs can be considered as Sharia compliant. Yes, you can invest in the IPO of a company. Yes, there is a concern that there is no real business which is going to happen. But as the Eof Standard also says, and as Islamically Sharia scholars also say, that the objective of the company is to engage in a compliant business. That screening is done by the Islamically research team, and if it is fine, we make the IPO Sharia compliant. Very similar to a blank check company also. So if a blank check company or a SPAC company, SPAC, Special Purpose Acquisition Company, currently has no business, but if it has a stated objective which is Sharia compliant, or it has no objective, that means it has not clearly mentioned that they're going to engage in a non-compliant activity, this will also be permissible for investment. So SPACs, blank check companies, and IPOs are allowed for investment if this screening also confirms that they are permissible. Sajid had asked us the question, how Islamically is different from other screening products like Ansar. I'm not sure what is the screening criteria of Ansar. I've not heard about them earlier. Whenever you look at a Sharia criteria, check who is a Sharia scholar. That's the most important thing. Okay. Secondly, check if that Sharia screening team has experience. Okay. So you should see who is doing the screening as well. So a lot of screening providers have come into the market after Islamically has come into the market. We welcome everybody, but you need to also understand that Islamically is doing this for the past 15, 20 years. Things which we started off, or concepts with which we started off 20 years back, is being implemented by a couple of new apps which are coming in now, which is automated screening and stuff. We've spent hundreds of Sharia board meetings, alhamdulillah, with Sharia scholars understanding this space, and hence we are able to give out all of these knowledge series. So be very careful about following apps. There are definitely some which are very credible, some which we have also recommended. I mean, yes, they seem competition to us, but we definitely recommend them because we know, due to the fact that we are in the industry for this long, that they are doing a credible amount of work. But there are many who just are trying to capitalize on the opportunity or whatever. So just be very careful as to what Sharia standards people are following and who are the Sharia scholars behind those companies. So he's also asking that there are less than 800 shares which are Sharia compliant in Indian market. Yes, on our app, there are about 700 to 800 stocks which are Sharia compliant in the Indian market. We do not screen all of the stocks on every stock market, but a majority or almost all large cap and small caps are large caps and mid caps are screened. Small caps is something which we're not very good at, but if you put up a screening request within 24 hours, we get back to you. Okay, Faisal is saying, I heard a hadith in which it mentions that giving, taking, and being witness of interest is haram. Then how is it halal to have 30%? As I've explained, and AOFI has given a very good explanation that here there are a couple of things that has to be considered in this thing. One, capital markets cannot be avoided. Two, interest-bearing debt cannot be avoided. Three, you need to keep it at a certain threshold. So if it is less than 30% or 33% in our case, then it is permissible. They are not saying that taking interest-bearing loans is allowed. They are not saying that. Okay. The criteria tells that you can invest in such companies which have taken interest-bearing loans because it is a umuman practice, or what do I say? As a common practice. Okay. Or it is a common evil which cannot be avoided, and you're living in such an economic environment where you cannot have access to interest-free debt. So you are bound to, or you're forced to take, or you have no other option to take an interest-bearing debt. In this environment, the Sharia scholars have come forward and they've said that let's keep it under a threshold, which is 30% to its market capitalization. So it does not give you, what do I say, an explicit permission that go ahead and take interest-bearing loan. It says that you can invest in companies where the interest-bearing loans are less than 30% as per AOFI and 33% as per Islamically. Sajid is asking question, are IPOs available on the Islamically app? Yes, any IPO which comes in, we track it globally and we screen it and publish it on the app. Abdi Wasa is saying, explain why compound interest is not haram. Of course, compound interest is haram. All kinds of interest is haram. Okay, there are a couple of things which people are asking among themselves. I don't think I have anything best to add. Bushra is asking, is intraday permissible? Yes, it is permissible. There's an article on Islamically App. It talks about that. I think you're asking, MIS or CNC permissible? I think it's relative to a particular broker. I'm not sure which allows you to do intraday trading. So you have to read the broker terms. She's asking, is dividend permissible? Yes, you can take dividends, but purify the amount of impermissibility out of it. Very simple. Whenever you get a dividend, put it in the functionality in the app called Purification. It will tell you the exact amount in your local currency which has to be purified, which has to be donated. Someone is asking, how often does Islamically screen upcoming IPOs? As soon as information is available, it goes to the research team. And whenever the information is complete in terms of giving an assessment, we go ahead and do the screening. Someone is asking, if I buy one share today, can we sell it tomorrow? Yes, you can. There's no problem. Yes, this webinar is also recorded. All webinars are recorded in our YouTube channel. It's called Islamically itself. Islamically has a lot of social channels. So we are on Facebook, we are on Instagram, we are on Twitter, we are on YouTube. We have an open channel discussion forum on the app itself. Someone is asking a question. So brother, if blank check company already announced merger with permissible activity company, then I can invest in it. All of these things are done on Islamically app. So don't worry, just look whether a stock is compliant. If it is, go ahead and invest. If a company changes its business activity, so somebody is asking, let me read the question. What if one stock is compliant and I invest in it, suddenly that particular company changes to non-halal products? Islamically research team keeps conducting its screening activity on every company as soon as the new financials are available. Whenever that happens, if a stock becomes non-compliant, you have 90 days to trade out of that stock or sell that position. Within that 90 days, if it becomes compliant again, then you are back to normal. You don't have to do anything. But if it continues to be non-compliant at the end of the 90th day, any gain that you make, including dividends or capital gains, has to be purified 100%. I have okay. There's another question. Do we need to purify capital gains? No, you do not need to purify capital gains. You need to purify only the dividends. Okay. Okay, somebody is asking a very good question, which is the last question I'm going to take today, inshallah. Is there a way to know in Islamically app when was the latest screening done on a particular stock and which quarter or year financial statements were used for that screening? Very simple. Every stock which is available on the Islamically app has been refreshed on a daily basis. That means our system goes ahead and checks if then a new financial statement has appeared. If it has appeared and we have all the information required to give out the latest screening, it will be done. So you need to understand that anything which has been classified as compliant or non-compliant on the Islamically app is the latest and the freshest of information which has been input into it. We have a huge research team, a huge database, a huge software that helps us do all of this, in addition to a dedicated team of researchers which help us screen the business side and the financial aspect of the company as well. How to purify dividends. It's a very simple thing. As if you get a dividend from a company, and let's say it is $100, and your purification ratio is 2%. You apply 2% on $100, which is $2. You need to donate this $2 to charity of your choice. There is an article on Islamically blog, on the Islamically app, as well as there's a video on Islamically YouTube channel, which tells you as to how purification has to be done as well. Very simply, I think we have come to the end of the questions. Apologies that I got dropped off in the middle. If you guys have not come across, we are running a very special discount offer as well for annual memberships. It just apply the code Islamically 60. I'll just write it over here. Islamically 60. And it will go to and you can get 60% discount on any annual pack. This is a very limited time offer. Alhamdulillah, a lot of people have taken benefit of this, and I hope you take benefit of this as well. This is going to close very soon. For people in India and Malaysia, there's a special discounted offer as well, which is going on. Get in touch with our customer support or check your emails. You would have got the offer. I think that will make it very, very accessible and very, very economical for you to access Islamically. Thank you for your time, and I hope the presentation gives you a good understanding. A couple of questions have come in now. I'll take this and then I'll close it. Okay, somebody has put in a very good question. Guys, there is uniformity in screening. For example, a stock which is haram as per 2 screening apps is halal as per the screening of Wahid Invest. Wahid Invest is the largest platform for halal investments in Europe and the West. I don't want to comment on this. You just have to figure out one app which you want to follow, one Sharia scholars board you want to follow, one research team that you want to follow, right? Just be very clear on that. If you're following one, just follow them and just disregard everybody else. There are a couple of issues over here. One, let's say, for example, Islamically uses their own Sharia criteria, which we've spoken a lot about. There are others who claim that they use AAOIFI. As we have seen in the current presentation that I've given you, AAOIFI is not very clear in terms of what is permissible and what is not permissible. So is there any clarity? Is there any definite written approvals from the Sharia board which tells them that this has to be treated in this manner or that has to be treated in that manner? I mean, for example, if I have to treat SPAC as Sharia compliant, I have a written approval from the Sharia board for that. If I have to treat certain business activities non-compliant, I have a written approval from the Sharia board. I know how to treat financial leases. I know how to treat non-permissible income in real estate companies. All of these are rules which have to be gone through with the Sharia scholars to get you the best results. Just find out if the app or the screening criteria that you follow has that capability. If yes, just stick to that and stick to that one thing. Don't have multiple apps, and if it is compliant in one, you go ahead and trade in that. If it becomes compliant in something else, you follow that. It is not what Sharia teaches us about. Sharia teaches us about consistency. It teaches about one school of thought. Just keep following that school of thought. Okay, Abdi Wasa is asking another question. Can I hold my shares over 10 years? If yes, what I will do compound interest that comes to my share? I'm not sure why holding your stock for 10 years will lead to interest. I'm not sure how this is linked. I mean, you get return on the appreciation of the share value, right? If you hold for 10 years, 20 years, 30 years, you get an appreciation, hopefully, on the share value. It's a capital gain. It has nothing to do with interest. Okay, Mukesh has asked a very interesting question. Is there any link where I can see the profile of people who are part of screening team at Islamically? Yes, you can look at us on LinkedIn, or inshallah we will organize something wherein the entire team can probably interact with everyone as well. Nadeem says, can you tell us about upcoming Sharia compliance IPOs in India? Everything is available on the app. Okay, Arshad says that there is no unanimity. So what he meant was there is no unanimity. I would agree to that, but there is convergence, right? As I've mentioned right now, AAOIFI, Islamically, Dow Jones, MSCI, S&P are all converging towards this one criteria. The problem is research. That how many of these apps, how many of these screening providers have the required infrastructure, have the required connect with the Sharia scholars, have the required caliber of Sharia scholars, have the required experience of Sharia scholars at their disposal to come up with screening results. So that's where the difference comes in. Simple as that. Zaira is asking a repeated question. She says, how do I pay zakat for dividends if I want to reinvest the money? In terms of that, we will inshallah conduct another webinar and also write an article about the zakat on equity investments. There's a separate AAOIFI standard on it as well. Once I have all the details, inshallah, I will conduct that webinar as well. And since I do not have all the information right now, I will not be able to comment on it. Okay, Mughis, thank you for your explanation. He says people are getting confused between compounding and compound interest. Compounding of capital gains is definitely not riba. Thank you, Mughis, for making me understand that. Yes, compounding of capital gains is definitely not riba. But when you invest in equity, right, I don't think compounding of capital gain happens, right? You bought a stock at, let's say, $10. After 10 years, it may be $1,000. Doesn't mean that the capital gain got compounded. It's just that it has gained that kind of value. So that's fine. Compounding is interest on interest. This part again has interest, very, very simple terms. I mean, compounding interest, everybody knows what compounding interest is. But capital gains don't work like that, right? It is not an effect of time and cost of funds. It doesn't depend on that. Okay, Irfan is suggesting, thank you for your comments, Irfan. We keep our advice stuck to a stock being Sharia compliant or not. We do not give out information or we do not give recommendation as to which stock is good or bad. I mean, there are discussion forums on the app as well. There are forums outside the app where you can find out whether investment is good or not. We are agnostic to investment returns. We can only tell whether a stock is compliant or not. Whether it's a good investment or not, we cannot tell. Muhammad, again, do capital gains need to be purified? No, capital gains do not need to be purified. Before I end this, again, I'm repeating myself that there's a discount going on, which is a limited period offer. Islamically 60, ISL, the entire spelling of Islamically, LAMICLY 60. So Islamically 60 is the code that you can use to get 60% off on any annual packs. You can take multiple markets as well. Okay, somebody says that Islamically says a blank check company is non-compliant, but I know it is merging with a compliant company, so can I still invest? If you have information which we don't have, then go ahead. But usually, if you can send us a screening request by giving that information, we'll be happy to rescreen that blank check company and give a new compliance. Right, I think that brings us to the end of this webinar. Apologies for dropping off due to bad internet connection at some point in time. You've been a very great audience, and please do utilize our discount codes. It's for your benefit. And this webinar will also be available on our YouTube channel. This is Alhamdulillah, our 14th webinar. All the previous ones are also available for your understanding. And we will meet soon We are also upgrading the app, and probably within just a couple of days, not even weeks, just a couple of days, you will find the new app. So even if you subscribe now, you will get access to the new app as well. Look forward to seeing you very, very frequently. Please do spread the word. We really need your support. And if you like what we are trying, what we're doing, please give us a review on the Play Stores. We really need more and more reviews, right? And if you like what we're trying to do, subscribe to our social media channels as well as on the app as well. For subscribing to the app, we're giving away a discount of Islamically 60. This recording will be available on Islamically YouTube channel as well. Thank you for being with us. Assalamu alaikum wa rahmatullahi wa barakatuh.